Good morning, good afternoon, good evening. My name is Naman. I'm the Chief Operating Officer of Management Consulted. Welcome to the final presentation round of the advanced degree track of the Case Competition World Cup. I am joined by Mark Cosentino of Case Questions, by my colleague Japheth, and by an esteemed panel of judges from some of the most incredible employers in the world. And of course, we are also joined by five finalist teams who are going to walk us through their growth strategy for the non-alcoholic beverage segment at Anheuser-Busch. So, welcome to those of you watching from YouTube, those of you watching from LinkedIn. We are excited to dive in. We're just going to take the next couple minutes while everybody's getting settled to run through a couple of announcements. And the most important announcement I have today, I think after announcing who the winner is going to be at the end, is this. It's just to say thank you to all of the employers who have taken part in this case competition experience. So I want to call you out by name: FTI Consulting, L.E.K, McKinsey, Nestle, Slalom, and Stax. Thank you all so much for contributing your time, your energy, your effort to being a part of this. I know that we've really enjoyed working with you, and I know that our teams have really, really appreciated uh, hearing your feedback and just being able to experience what it's like to present to a panel of professionals at these wonderful employers and just get a sense for where they're at in terms of their presentation ability, their analytical ability, compared to the standards that you hold your teams to in the quote unquote real world. So thank you so much for joining us. We're really excited to hear from you as we move throughout today's session. Now, a quick announcement, a quick piece of housekeeping. Over 120 universities work with Management Consulted on hosting case competitions, on holding case competition training, and case interview training as well. So if you're interested in learning more about how Management Consulted can come to your campus and help your students, help your peers prepare for case interviews and or case competitions, just go ahead and scan the QR code there. That'll give you the opportunity to book a call with a member of our team. It's 15 minutes, it's no obligation. And what we'll do is we'll just walk through the different options that you have to bring us to your campus, and you can decide if it's something that works within the scope of your program and just the learning outcomes that you're looking to drive on your campus. Japheth, with that, I think we're ready to kick off. So I'll turn things over to you. Thank you so much for all of your work as well in making this happen. And I'm excited for the final round.
Amazing. Thank you so much, Naman. Again, welcome everybody. We're super thrilled to be with you today. My name is Japheth Mast, mastermind behind helping organize this case comp along with the rest of my amazing team. So big shout out to them for making this possible, as well as our employer firms. We are on a pretty tight schedule, so we're going to get right into it. And so how this is going to work is we got five teams. They're going to take 5 minutes to present their solution right for Anheuser-Busch. And then we're going to have 4 minutes of questions and answers with the judges. So first up is Team 81. So you can go ahead, pull up your presentation here, and we'll get the 5 minute timer started. Thank you so much. Perfect.
All right. Hello, we are Team 81. My name is Cabria Thomas, and my teammates are Angela Garner, Jason Fight, and Deborah Obakor.
Consumer behavior is changing. More drinkers are prioritizing health, moderation, and quality over alcohol content. The demand for non-alcoholic craft beer, especially IPAs, is skyrocketing, growing at a 30% rate over the next 5 years. But here's the challenge. Demand is not being met due to a lack of accessibility of premium non-alcoholic options. Smaller, craft, non-alcoholic brewers pique consumer interest, but they lack distribution power. That's where Anheuser-Busch comes in. We recommend that Anheuser-Busch acquire and scale 4 regional craft non-alcoholic IPA brands and leverage AB's existing infrastructure and distribution to increase their product diversification and capture the growing non-alcoholic IPA market. This solution will garner $1.4 billion over a 5-year period for Anheuser-Busch. The non-alcoholic craft beer market proportions show a preference for IPA-style beers, with the exhibit indicating a 56% market lead. Non-alcoholic IPA sales soared 170.9% over a year. Shifting preferences fueled non-alcoholic beer growth, with sales up 33.7% as total beer sales fell 2.9%. This is projected to generate $2.3 billion uncaptured market dollars over the next 5 years within the non-alcoholic beer segment. The main drivers of this growth lie in recent consumer preferences. 1 out of 5 non-alcoholic beverage consumers in 2023 were new entrants to the category, signaling a growing interest and adoption. This is an effective consumer demand for healthier, low-calorie options and innovative brewing techniques that highlight hoppy flavor, similar to an alcoholic IPA.
Consumer drinking habits are evolving. 49% of Americans plan to reduce alcohol consumption this year, which is a 44% increase since 2023. But instead of quitting completely, many are shifting their behaviors. These consumers fall into 4 key groups: abstainers who avoid alcohol entirely, trailers who occasionally explore non-alcoholic options, blenders who alternate non-alcoholic and alcoholic beverages, and substituters who actively replace some alcoholic drinks with non-alcoholic options. This last group presents the biggest opportunity. Substituters aren't looking to compromise. They want health-conscious options, bold taste and quality, and convenient accessibility. But barriers still exist. Price versus perceived value, social stigma, and limited variety keep many from making the switch. The market needs more premium, widely available non-alcoholic IPAs that deliver on taste and experience to capture substituters.
Our 2 non-alcoholic competitors, our main ones, primarily focus on their own niches and have found considerable success doing so. Heineken's non-alcoholic segment led the market by a sizable margin with 20.9%, in large part due to its branding prioritization of Heineken 0.0 as a substitutor's drink. Athletic Brewing took a different approach in its rapid rise to the 3rd highest selling company, building out their brand based on offering diversification as a fully non-alcoholic brand. While AB's flagship brand of Bud Zero is the 2nd highest selling non-alcoholic beer, its 3 main brands combined total a third of the market. This combination of brand recognition and offering diversity indicates an opportunity for AB to continue filling the gaps in the market and gain a sustainable competitive advantage. By diversifying into IPA craft breweries, Anheuser-Busch can meet increasing demand and increase market share by appealing to substitutors' preferences.
There are 4 needs in the non-alcoholic beer market that Anheuser-Busch will address through their capabilities. First, AB's continued year-over-year revenue growth will allow them to acquire existing non-alcoholic IPA breweries, which will capture the growing customer segments. Additionally, Anheuser-Busch sales and distribution companies, wholly owned distributions, or WODs, will be able to efficiently distribute these new products through their already regionalized system. AB can reinvest profits to expand the acquired IPA breweries' capabilities to fully mass-produce non-alcoholic IPAs in their respective regions. Finally, by leveraging AB's existing infrastructure and expertise in the U.S., AB will effectively adapt to any challenges or any changes in the U.S. market. For Anheuser-Busch's next steps, we've identified 4 different regional breweries with an existing customer base to acquire. We've pinpointed each brewery's best-selling non-alcoholic IPA with recommended pack size and cost for AB to produce and distribute in their respective region. By regionalizing non-alcoholic IPA production and distribution, Anheuser-Busch creates a unique competitive advantage and effectively targets new customer segments with diverse consumption patterns. By integrating the best non-alcoholic IPA brands into their portfolio, Anheuser-Busch doesn't just follow the trend, they lead it. Thank you, and we are open for questions.
So I'll start. So congratulations, and thank you so much for being a part of this competition. Quick question. So you've mentioned 4 targets. How would you sequence these targets? Which one would you acquire first and why?
I'll be happy to elaborate on that. Great question. We should prioritize substitutors because they represent the low-hanging fruit. They're already looking for an alternative, meaning they have a higher likelihood of conversion with lower acquisition costs. Instead of trying to convince brand loyal customers to break long-standing habits, we focus on those who are actively dissatisfied or open to that change. So by capturing substitutors, we can quickly increase market share, disrupt competitors, and build momentum through positive word of mouth.
Great, yeah. So great response on the segment. I'm looking more at like the breweries. So which one would you acquire first from a brewery standpoint?
Yeah, I can take that. So for this, I would say it's more important to focus on the northeastern brewery. As you can see, there are more facilities Anheuser-Busch has there because they have a higher prioritization there. The South, it also presents good opportunities, as we've seen the market grow there substantially when it comes to non-alcoholic IPAs. But I would say Northeast is the most prominent, especially because it is a bigger brewery, so it'll require more resources to be able to effectively acquire it.
Have you given any thought into, I see like operationally it makes sense, maybe financially it makes sense. What about culturally? So is there like a cultural alignment with Anheuser-Busch?
I would say the cultural alignment, I mean, I would focus primarily on the fact that that is where the growing customer segments are, and due to their facilities being located there, how they're very dense there, I would say that that aligns pretty well with Anheuser-Busch's, where they seem to be holding their all of their, or a good portion of their facilities there.
Thank you.
Maybe one for me. Do you expect the playbook to be the same in acquiring each of the four?
I do not think that the playbook will be the same, as based on how they're located and how we're going to expand their capabilities and scale them up. Each has their own different vibe because they are a craft brewery. So that will require us to only be able to produce so much. And so that would require us to, as we're integrating them into the Anheuser-Busch community family, we need to really target and focus on their niches in order to scale them effectively without isolating what makes them so unique.
To add on to what Angela said, the main focus is that Anheuser-Busch already has this stuff in place, right? They already have the WADs, these regional distribution chains. And so our goal is, because IPAs in particular are such a cultural thing, each region can develop their own sort of independent branding. And we believe that that'll lead to success.
Might be a question for me. As the market grows and becomes more mainstream, would you expect that it becomes predominantly craft breweries that are winning share there, or is it going to look more like what the traditional beer market looks like today, where big beer, still comprises upwards of 70% of revenue and volume?
I believe that the trend will continue, that the craft breweries are increasing, because right now they have been continuously on the rise for the past 5 years. And so coupling with that, people are also trying to prioritize health and more moderation. And so not only will craft breweries and IPA specifically be on the rise, but also the segment for non-alcoholic alcoholic options. And so by doing this method, we believe that we'll be able to not only be there before other competitors are starting to come in, we'll be able to also be able to mass produce as well and get it to be more accessible for other people.
Amazing. All right. Thank you so much, Team 81. Well done. And we're going to move on to the next presentation. So I'm excited to welcome Team 83 to the stage. You can pull up your screen share and we will just dive right in. All right, we see it. Take it away.
Good day, esteemed judges and colleagues. We are Team 83. We're here today to present an exciting opportunity, one that positions AB InBev as the leader in the next wave of non-alcoholic beer innovation. The non-alcoholic beer market is no longer a niche. It's a 14.7 billion industry projected to grow significantly by 2030. Millennials, Gen Zs, and the sober curious movement are driving this shift. While brands focus on health benefits, no major player has redefined social drinking culture. This is the gap that AB InBev must seize. To determine this approach, we explored various strategies. First was acquiring and relaunching a non-alcoholic beer startup. Secondly, expanding Budweiser Zero into a vitamin-infused functional drink, or launching AB Craft Zero. Our solution, AB Craft Zero, a premium non-alcoholic craft beer built for social occasions, bars, restaurants, and nightlife. Why AB InBev? No other player has the brand strength, market reach, and execution capability to dominate this space. By leveraging AB InBev's expertise and distribution power, AB Craft Zero will set a new standard industry. We will now take you through our strategy.
The North American non-alcoholic beer market is on a strong growth trajectory, but it remains highly fragmented. The top 12 companies' market share has dropped from 41% to 20%, creating a leadership opportunity. Despite 60% of non-alcoholic beer sales happening in stores, social spaces such as bars and restaurants remain underserved. This is the untapped market AB Craft Zero is built to own. With AB InBev scale and execution capabilities, AB Craft Zero will be established as the category leader, making non-alcoholic beer a staple of the social drinking culture.
43 to 61% of millennials and Gen Zs are driving demand for craft style, low-calorie beverages with a social edge. 20 to 28% of the market are sober curious and are cutting back on alcohol, but still want non-alcoholic options. Fitness and wellness enthusiasts make up 15%, prefer functional, low-calorie drinks, while drivers, cultural abstainers, and those in recovery see non-alcoholic beer as a social enabler. Consumers want bold flavors, craft authenticity, and consistent quality at an accessible premium price. This directly informs our strategy and positioning against competitors.
Athletic Brewing leads the health-conscious non-alcoholic beer segment with 19% market share, but lacks strong presence in bars and restaurants. Their limited scale prevents them from shaping mass marketing drinking culture. This is where AB InBev wins, combining product innovation with brand influence to take non-alcoholic craft beer mainstream. Small brewers struggle with quality consistency, limited scale, and high prices, whereas AB InBev can combine craft appeal with mass market execution. Winning isn't just about making great beer. It's about making it the obvious choice everywhere. Athletic built the category, but AB InBev will own it.
AB InBev's brand mastery, innovation, financial strategy, and market reach create the formula for success in launching AB Craft Zero. This new brand will combine craft quality, accessible pricing, and a social-first identity to redefine the category. Our three-point play, brew, brand, and scale, ensures authentic craft positioning, attracts early adopters, and drives long-term market leadership. In the first 3 months, we will perfect craft quality formulation using smart brewing technology. In the next 3 months, we will refine flavors, launch bold marketing, and leverage AB InBev's reach to capture early adopters. Post-launch, we will scale aggressively into retail, bars, tap rooms, and digital channels for mass adoption. Rather than acquiring an unscalable craft beer brand, AB InBev should use its marketing distribution and brewing expertise to establish AB Craft Zero as the market leader. This is the moment to lead. This is the moment for AB InBev to own the future of non-alcoholic.
Okay. Thank you so much. Well done. All right. Pivoting to Q&A.
Sure. Maybe one question for me is it seems like the recommendation here would be to build a new brand that plays in non-alcoholic beer that is separate from brands that are already in the portfolio. Could you talk a little bit more about sort of what were the trade-offs that sort of allowed you to deprioritize something like an acquisition of an already existing brand in the market, and or using I think the using their current house brands makes sense, but would be curious about the downsides that you guys see from an acquisition strategy.
I'm sure I will take that. So when we were evaluating the strategic options we had, we looked at three things. We looked at market opportunity, competitive advantage, and scalability and financial impact. So when we were looking at acquiring a startup, a non-alcoholic beer startup. The pros of it were we had immediate market entry and existing brand presence. But then the cons were that it's expensive and it limits us in scalability and integration, and we'd have issues with integration. So our final verdict was that it's high cost and low term. It sort of had a low long-term control. And then when we looked at relaunching Budweiser Zero, it's an existing brand and it has good equity and quick execution, but it doesn't address the craft demand. And that's the area that we were hoping to target. So launching a new one and using the mechanisms that we already have in place seemed like the right choice.
Okay. Then maybe one last question is, you talked a lot about the distribution and marketing prowess of the company and, doing in-person activations, et cetera. There's kind of only so much marketing effort that the company can provide. Do you have any concerns, or are there ways to mitigate any cannibalization of, hey, we've done a really great job of winning in what is currently a very niche non-alcoholic category, but does that come at the expense of hurting our sales in the alcoholic category where we are a market leader?
We believe that there is no cannibalization, mainly because we are creating a new segment. Given when you look at our statistics, there's already a shift in terms of drinking habits of our consumers. So we are taking a new market segment that should help build scale and even profitability as well.
One thing that piqued my interest when you did your market projections, you had a worst case and a best case, and the worst case was very close to base. The best case, the optimistic case, is much higher. So that makes it feel like a sure bet almost. So I just wanted to understand what makes you comfortable with the worst case being so close to base and the upside, the optimistic, being different.
Lynette, can you take that?
Thank you very much. So we used various sources in coming up with our projections, and the worst case type scenario had the market reaching about 12 million, just looking at non-alcoholic beer beverages in North America by 2030. Then the most realistic scenario, which we are calling the base case, is the one that's coming up to 14 million. Of course, the most optimistic scenario is more than 20 billion by 2030. I think the key takeaway from the projections is whichever way you look at it, the market is set to grow, which shows that there's an opportunity in this market segment. So in terms of our best case, we tried to keep it as realistic as possible. That's why it's very close to the worst case. We didn't take an average position. But the key takeaway and the key insight is whichever way you look at it, there's so much room for growth within the non-alcoholic beer segment. So AB InBev has to participate in this market.
Amazing.
Maybe as a follow-on to that, sorry, is just what do you think could go wrong? Because I think you're pointing out something that's very true in terms of secular market trends, but I'm curious though, like where do you think this may fall short in terms of your forecast?
We got 15 seconds for an answer here.
Okay, so for us, in terms of falling short, we see that the numbers that we have, they are already a worst case type of projection. So we do not anticipate that the customer trends will change. Like we said, the market segments that we are targeting, they are looking for sustainability, health conscious options. So lots of people are actually moving, or at least they are sober curious. They've got the blended approach where they are taking alcohol and non-alcohol. So in terms of the demand, we expect that is going to grow. Probably the risk could be toughening of the regulations for the production of the beer, but we don't think that will have an overall impact in the category, probably just a slight increase in costs due to the regulatory compliance.
Thank you.
Okay. Thank you so much, Team 83. Well done. Obviously, a lot of hard work went into this. All right, Team 84, you're up next. You can pull up your slides and we're excited to hear from you.
All right. You can see the slides?
We can.
Okay.
All right. Hi, everyone. Our team is super excited to introduce to you how we believe that AB InBev can accelerate their growth in the non-alcoholic beer segment within the US. We recommend that AB InBev introduces a new product called Michelob Ultra Fit. This is a non-alcoholic fitness beer geared towards younger, health-conscious Americans. We'll discuss how US liquid segments are currently fluctuating because of this demographic, as well as their prioritization of health and fitness. We'll also discuss how other major brewers are not currently addressing these priorities, giving AB InBev the prime opportunity to enter this new product into the market.
Thank you, Charity. So looking at the beer market, there are some shifting tides. On one hand, we have young Americans drinking less and less, with only 62% drinking as of recently. On the other hand, we have a boom within the non-alcoholic beer sector with a CAGR of 9.9, and millennials are really driving this growth, making up about 61% of last year's consumption. This aligns with trends towards more sobriety. About 60% of millennials and Gen Zs plan to drink within 2025, as well as an increase in health trends. Young Americans plan to spend 3 times as much on health and fitness than on social drinking in the next year, and this will make up about 23% of their social priorities. This shift presents a significant opportunity for AB InBev to capture market share in the rapidly growing non-alcoholic beer segment through a fitness beer that targets health trends in young Americans.
So that leads us to the question, what do young Americans care about? Young Americans are redefining how they drink. They want to stay fit, active, and social without alcohol holding them back. We're seeing a surge in sober curiosity among 18 to 34-year-olds with viral trends like Sober October and Dry January. These consumers want to stay active, make meaningful connections, and choose products that complement their wellness-focused lifestyle. But here's the problem. Non-alcoholic beer lacks the great taste and functional health benefits that our consumers are parched for. Consumers want a better solution, and they're willing to put their money where their mouth is, with the premium price expectations of $2.50 to $3 per 12-ounce can.
So we understand that markets are in shift because of these young Americans. And the question becomes, are products currently in the market meeting their needs? And frankly, traditional beers do not. While light and non-alcoholic beers are perceived as slightly healthier, they've still got a long way to go. Other major brewers have started to introduce more fitness-focused liquids such as hydration and energy beverages, but nobody has introduced a true beer solution. Right now, the market is primed for the introduction of a new, non-alcoholic, fitness-focused beer that addresses young Americans' prioritizations of health and fitness.
And hence, our solution lies in the acquisition of Muskoka, an Ontario-based producer of the non-alcoholic beer Rally. Here, you can see on the screen Rally's dry run product. It's light on alcohol, it's light on calories, it's high in electrolytes, and it's designed for post-fit session socialization. All elements are in one simple can, which is what our target market is looking for. AB InBev bears top brand recognition for related beverages across 50 countries, with over 173 global breweries. The combination of our global digital ecosystem generates $40 billion in revenue across business to business and direct to consumer channels. This represents 70% of our business's value. Our task is to acquire Rally's unique recipe, scale it up, and leverage our existing partnerships to promote the solution that young, fit consumers want that currently is not available on a large scale. Let's take a look at the next steps.
Our next steps will begin within the next 2 to 3 months with the acquisition of Rally Beer Co. Our next steps will also include a go-to-market strategy, forming strategic market partnerships, upscaling our manufacturing and distribution, and it'll end with a full product launch of Michelob Ultra Fit in Q1 of 2026. Thank you all so much for your time, and we're excited to hear your questions.
Great. Well, nice job, Team 84. Maybe just first question. You end on an interesting conclusion and outcome. How do you think about the trade-offs of rebranding Rally to a Mick Ultra Fit or Mick Ultra brand?
So our idea here is that we wanted to be aligned with AB InBev's current strategic pillars. And one of those pillars is to continue to leverage the existing mega brands. So we were looking for which one of those mega brands would be best aligned with this young, health-focused demographic. And the answer was very clearly Ultra. And we saw that even after we finished this presentation in the Super Bowl, AB InBev agrees with the Ultra Wholesale campaign that they had. There seems to be a lot of agreement that Ultra is the correct brand to continue to leverage, continue to chase young, health-conscious Americans.
Got it. So when you think about Mick Ultra, your conclusion is that you think there's a lot of crossover with that customer base that Rally serves today, as well as the one you were currently serving under the AB brand. Is that right?
Correct. Correct.
Got it. Okay. And what risks, if any, then do you think AB faces in bringing that type of product to market, in whether it's alienating their customer base, perhaps confusing the market? Just what do you think are some potential risks there?
Yeah, I'm happy to answer that. So I think one of our major concerns with this product specifically would be cannibalization. But we do believe that it'll be a great complement to the Michelob Ultra family and offer that same fitness focus, but a non-alcoholic alternative when it's not an option to have that alcoholic beverage.
Got it. Okay. Okay. Maybe just last question then for me is, as you think about just the overall, let's say, next few years in terms of as this rollout continues, how do you think about just maintaining pricing, knowing that there are going to be a lot more competitors in the market, and what impact that may have on the margins that AB is able to maintain here?
So I can touch on.
Yeah, go ahead, Taylor.
Please. I'll touch on just a bit here the advantage that we have in just the sheer size of AB InBev. We're the global leader across beer brands. And so being able to leverage our existing leadership and brand presence gives us an advantage that, frankly, smaller competitors or small crafts wouldn't have. So the success of acquiring a recipe that we already know tastes great and is popular, we combine that with our branding and our partnerships. We believe that's the way that AB InBev bears the advantage to capture this market growth.
Great. Thank you.
I guess the shift to a fitness focus branding in particular is, I think, unique and bold. What made you comfortable overall? What's the main foundational aspect that made you comfortable with that being the single bet?
I'll be happy to take that. So there's already been a little bit or several attempts at associating non-alcoholic beer with fitness activities. I believe it was in the 2018 Olympics that a significant amount of a German-based non-alcoholic beer was donated to Olympic Village to allow the Olympians an opportunity to rehydrate with that social aspect that beer has in bringing people together. With further studies, they also noticed that there's significant benefits to non-alcoholic beer, including its vitamin Bs, which help immune support, as well as increased electrolytes, which can increase the hydration effects.
Wonderful. Okay. Thank you so much for your great presentation and answers. Awesome. All right. Next up, we've got Team 89. Are you ready to rock and roll?
Yep, I'm ready.
Okay, good to go.
All right. Hello, everyone. Glad to be here today. My name is CJ, and I have with me my team members, Buddha, Ramya, and Eugene. And we are eager to present our strategic approach for Anheuser-Busch to enter into new opportunities in the non-alcoholic beer segment while maintaining their status as North America's leading beer brand. I think I can't really hear Ramya.
Hi, team. Are you missing someone?
No, I think my team member is talking, but for some reason the sound is not coming through.
Looks like you may be muted. Still can't hear anything.
All right, I think I can maybe cover for that if you guys can't hear it. So we recommend AB to acquire Athletic Brewing Company, a leader in the craft non-alcoholic beer with potential to boost their non-alcoholic beer revenue by over $100 million. And our research showed that the strong growth in both segments with significant demographic overlap, creating synergy. And with few major competitors in the market right now, the acquisition allows AB to dominate early in the craft NA beer segment. And we also recognize that leverage AB's brand power and distribution channels, this move will expand reach and drive long-term growth.
The potential of the flourishing non-alcoholic beer market is predicted to reach nearly 10 billion by 2029. Let's start with key market trends in North America. By 25, expected revenue is set to hit 7.8 billion with a total volume of 1.142 billion liters, along with sales mainly through offline channels. Notably, from 22 to 29, the market is expected to grow at a rapid CAGR of 17%. Now let's spotlight Athletic Brew Company, a trailblazer in the space. The companies are the fastest growing new entrant in the non-alcoholic beer market. It recently inaugurated a massive 150,000 square foot facility in Connecticut, making it the largest non-alcoholic brewery globally. Their beers like Run Wild IPA and Upside Down Golden have not only won numerous awards, but also garnered a robust following. Athletic Brewing Company is on a steady growth trajectory, boasting an average year-on-year growth rate of around 11%. In summary, the non-alcoholic beer market is booming, and Athletic Brewing Company is leading the charge with innovative products and significant growth.
Our analysis shows a strong overlap between craft and non-alcoholic beer consumers, making craft NA beer a major opportunity for AB. As you can see, millennials drive both segments, already strong in craft beer and growing in NA beer due to health-conscious trends. Both groups have high education and income levels, meaning they value premium quality and are willing to pay more. Similar gender splits allows AB to expand without a major marketing shift. Why this matters? Millennials want craft-style experiences with healthier choices. Both segments support premium pricing and brand loyalty. This allows AB to tap into a fast-growing market while reinforcing its leadership. With these clear overlaps, AB is in a prime position to lead the craft NA beer market and drive future growth.
And among the top three breweries, AB dominates the non-alcoholic beer segment with its combined sales of over $117 million across its brands. Heineken 0.0 took the top spot, and Molson Coors, unfortunately, didn't even enter the top five. Now, even though AB and Heineken have strong performance in the craft segment, the craft non-alcoholic market is currently dominated by Athletic Brewing, who ranked number 3 in the overall NA beer segment with just craft beer offerings. So considering that Molson Coors recently shifted their strategy to focus more on energy drinks and cocktails, and Heineken's 2025 strategy mainly focused on promoting the social acceptance of NA beer, the lack of major industry players in craft NA segment gives AB great first mover advantage should they acquire Athletic Brewing and capitalize on its rapid growth.
AB InBev's acquisition of Athletic Brewing ensures strong growth by leveraging its retail partnerships with Walmart, Kroger, 7-Eleven, and Costco for premium shelf placement. We project profitable expansion while maintaining Athletic Brewing's premium pricing and loyal customer base. Brand visibility will be boosted through major sponsorships like the Super Bowl, FIFA, UFC, and Coachella. With 60-plus distribution facilities and cold chain capabilities, AB's logistics ensure an efficient nationwide rollout. Lastly, AB's proven ability to scale brands such seen with Shine Water will drive Athletic Brewing's rapid growth while preserving its craft identity. Moving forward, we have 4 key steps for AB to evaluate to secure its position as leaders in the NA beer industry. First is to evaluate the acquisition price point of Athletic Brewing. Second is a financial forecast of its merger. Third is a review of regulatory and antitrust laws. Lastly is to ensure they have unique marketing plan post-merger. These steps will be part of our recommendation to AB to ensure a successful merger. Thank you. We are now open to questions.
I'll kick us off on the questions. Thank you. I guess one of the things that you stated is we can capture a significant share of the market if we preempt competitors. I wanted you to elaborate a little bit on what do you think, what makes you believe that could allow us to preempt competitors, given that I saw there's some NA sales that others are doing in this market already.
Yep, I can take that question. Thank you. So by acquiring and through an inorganic growth strategy, by acquiring Athletic Brewing Company, Athletic Brewing has already established a brand. They have a very loyal brand following, and they have created a market segment specifically towards craft brewing. So by that inorganic acquisition, we feel that AB InBev is able to acquire that customer segment without potentially cannibalizing any of its existing products.
What do you think competitors would do in response to this?
When we look at the next few companies like Partick Brewing and Good Brewing, their revenue growth, their R&D in terms of newer flavors is not as close compared to Athletic Brewing Company. So they're leading already. Competitors could try to put in more R&D into getting newer flavors so that they can take away some of that customer segment that Athletic Brewing has today. And that might be at a risk for them to increase for that cost to translate to their products and make it pricier than it is today. So we believe that AB InBev with this acquisition is still at a competitive advantage.
And what made you comfortable in prioritizing some of the activities and partnerships? For example, you mentioned Coachella. Like, what in particular leads to those being big ideas for this particular launch?
Yep. So here we would like to take an example of Red Bull. Red Bull's marketing strategy has been a lifestyle brand. They have invested a lot of into adventure sports and motorsports, and they have that association going on with them, which makes them such a successful beverage brand. Similarly, Athletic Brewing also in the past has been partnered with music concerts, or they made a documentary with Netflix. With kind of trying to establish themselves as a certain set of a lifestyle brand towards activities, social activities, right? And that helps Athletic Brewing Company to grow their customer base.
Last question for me. So you're saying this is a playbook that's been done before. We are faster than competitors. We have something that customers want. Then could I ask you, what do you think the biggest risk for us would be?
I think for us the biggest risk would be losing Athletic Brewing's independent brand. Currently, we would plan a hands-off approach to where AB would allow Athletic Brewing to maintain its own brand identity. So for us, I think losing that established customer base would be one of the biggest risks. Losing the brand appeal.
One question for me. Your recommendation hangs on Athletic being in market. And so I guess 2 questions. What if another brand preempts the acquisition before us? Or 2, Athletic says we're not for sale. How does your conclusion change?
At that point, there are 2 ways that AB can approach its strategy. One, look at other competitors in the area, understanding that they may not be as penetrated as Athletic Brewing Company is, and 2, at the same time, try to synergize some of their R&D work with the second competitor and in coming up with newer flavors for their own product lines.
Okay, thank you so much, Team 89. Well done. All right, last but certainly not least, we've got Team 99. We're excited to hear from you. Go ahead and pull up your screen. All right, We can see it. The floor is yours.
Fantastic. Thank you. We are Team 99, and we are pleased to make this presentation on winning the next generation and Anheuser-Busch's move into the functional beverage market. With that, let's move on to our executive summary. We propose that Anheuser-Busch acquire the functional beverage brand Olipop in order to capture the Gen Z market, diversify their product line offerings, and unlock high-margin growth capabilities within pre-existing infrastructure. This is a move that we believe will allow Anheuser-Busch to branch out into and capture a new and thriving market. We believe it will capture critical consumer demographic changes, particularly in Gen Zs, in which they prioritize wellness over alcohol consumption. We believe that this is a rare opportunity to move in as a leader in the functional beverage market, and that through various synergies and Anheuser-Busch's strengths, this move will propel Olipop's growth and expand their consumer reach. With that, let's move on to an overview of the market landscape.
It is interesting to note that after sustained growth for multiple decades, the US beer market is actually declining by 8% over the past 5 years cumulatively, and is set to decline by another 4% over the next 4 years. A lot of this has been triggered by 61% of the US Gen Z actively choosing functional beverages instead of alcohol. This has prompted growth in the functional beverage market, which was growing at 3% CAGR in the past 5 years, but is now set to grow at 8.1% until 2030, becoming an $84.5 billion market. The best or the most prudent move for AB InBev to move here is by acquiring Olipop, which is the market leader in the probiotic drink subsegment of the functional beverage market. They have 21% market share in the US, and they have multiplied their sales by 500x, with year 1 sales being $1 billion and year 5 sales being $500 million. Next, let's speak to our customer base.
Gen Z is redefining the beverage industry, prioritizing health, functionality, and premium experiences. 50% choose beverages for health benefits, and 40% are willing to pay more for functional drinks. Olipop has captured Gen Z's attention with authentic marketing and a focus on gut health, making it a favored brand. This shift presents a high margin opportunity for Anheuser-Busch to expand beyond beer and capture the next generation. Olipop is perfectly positioned in this category. By investing now, Anheuser-Busch can future-proof its portfolio, regain market share, and drive new revenue growth before competitors can take the lead. Now let's look at the competitive landscape.
Well, starting with the traditional beer market, AB remains the dominant player, holding over 30% of the market share. However, in the non-alcoholic beer market, the landscape is quite different. Heineken leads with approximately 20% of the market share. But looking beyond beer, one of the fastest growing categories is the functional beverage market. This space is highly fragmented and increasingly being dominated by emerging markets and players rather than legacy brands. Companies are rapidly gaining market share by offering functional beverages infused with wellness ingredients. With these insights in mind, how can it strengthen its position in the non-alcoholic and functional beverage space while maintaining its leadership in beer? Now we move to company capabilities.
Thank you. So the company has strong experience in acquisitions, and we predict that this expertise would facilitate a smooth and efficient integration of Olipop. Anheuser-Busch also has the largest distribution network in the United States, with over 500 distributors nationwide. This would allow Olipop to expand quickly without financial limitations. Additionally, and quite interestingly, the internal BEES platform for distribution would further improve access to retailers, increasing availability and accelerating growth. Anheuser-Busch's vast resources could boost Olipop's product development, not to mention boosting productivity of pre-existing operational assets in brewing facility capacity. Finally, Olipop connects with younger consumers. Anheuser-Busch can use digital marketing and influencers to grow Olipop's brand among Gen Z, expanding its market reach without changing its core brands. Now, let's talk about next steps.
To successfully acquire Olipop, we have a phased approach. In the first 4 months, we would do financial due diligence and assess any risks. In the following 4 months, we would finalize the acquisition and develop an integration roadmap and identify any retail expansion opportunities. In the last 4 months, we'd complete the acquisition, adding Olipop to Anheuser-Busch's portfolio, expanding its presence, and supporting that expansion with the campaign focused on Gen Z. Thank you so much for your time.
So congratulations and thank you for your presentation. Quick question. So do you have a sense for what Olipop's market penetration is for Gen Z and millennials? Like what's their brand awareness there? And what are some of the strategies that they're using to capture that market?
Yeah, so actually Olipop is completely positioned only in Gen Z and within millennials. They're one of the strongest brands there. In terms of what they're doing to capture market interest and reach those audiences, leveraging everything from the packaging itself. I don't know if anyone's had a chance to look at it, but it's very bright, eye-catching, but through to the social activations that they're doing. So whether it's the kind of influencers that they're working with, the kind of activations they're doing on TikTok, the brand partnerships that they're building with those influencers and the other activations that they have. We have a couple ideas on what we could do if Anheuser-Busch was to take it on to support the existing sort of market growth strategies that they have.
Great. And then one quick follow-up question. So you highlighted their very rapid growth and expansion. Sounds expensive, especially if they stay on that trajectory. And so just wanted to see if you had a sense for what they would cost to acquire.
Great question, Matt.
That's a great question. So most recently, we've seen interest from other big players in terms of acquiring Olipop. Most recently, they were engaged in talks with Coke and Pepsi from adjacent markets in terms of an acquisition. So we do actually have a relatively recent $1.85 billion recent valuation within the last 30 days. So we do have a relatively good idea of how this can be done. Even if, given the enormous EBITDA generated by Anheuser-Busch, even on a monthly basis, if this deal was still financed with 50% debt, 50% equity, this would represent less than 0.01% of Anheuser-Busch's EBITDA. So it sits within a reasonable kind of valuation, so to speak, for Anheuser-Busch to be able to move in. And we do think they could make a better offer based on the operational synergies that they could offer as opposed to, say, big soda players.
I'm smiling because you wanted me to ask that question, didn't you? Nicely done. Yes. Okay, great. All right, I'll turn it over to everyone else. Thank you.
What I appreciated the focus straight away on Gen Z. Anything to add on any other possible segment?
So I'll take that one. So these guys are into functional beverages, which are not just focused on Gen Z, and with AB InBev and their production capacity added, there's a huge millennial market that is also going to shift towards them. And these guys are generally focused, like Olipop is generally focused on probiotics and prebiotics, but with AB InBev already having more functional options like healthy drinks and energy drinks, that could be an increased product portfolio that we could explore. So yes, definitely the young millennials would be an added target market.
Any other questions?
One question for me. It's an interesting idea. It still feels like a pretty nascent category, though. So I do wonder if there's enough growth to offset the declines that we're seeing in the core business. How do you think about that?
So I think it is, as of now, the market is about $10 billion if we look at purely the probiotics in the US, growing at about 9% CAGR, which is actually faster than functional beverages, which is 84.5 billion. So I think, and also with the continuous change in preferences with young millennials as well as Gen Z actively transferring into that market, I think the growth trajectory is only going to get accelerated. So for us, it's maybe slowly diversifying from a slowly shrinking market to a rapidly growing market. So I think it's a good bet to make on in terms of the market as well as the player.
We also view it as something that won't cannibalize the current core products and actually helps them win back that Gen Z audience. One of the things that we were looking at in terms of research was one of the snafus that happened with Bud Light and trying to reach that Gen Z audience. And we think this is actually a way for them to regain that trust and actually penetrate that market in an effective way.
Amazing. Okay. Thank you so much, Team 99. Well done. All right. Well, hey, we're going to take 1 minute to let the judges finalize the scoring, and then we're going to announce the winners. All right. While we're letting them finalize, I'm going to share my screen. And so now the reveal before the big reveal is just team names and where the teams are coming in from. So Team 81, Team Crockpot, love the name, from the University of Alabama, Manderson Graduate School of Business. So amazing. Well done, Team 81. Team 83, Team Jehuda. I hope I'm saying that right, but the University of Cape Town Graduate School of Business. Thank you so much for participating in this competition. Well done. All right, moving down the list, we've got Team 84, Team the Think Tank. We've got University of Florida represented from the Warrington College of Business. So amazing. What a diverse group here. Moving on, Team 89, we've got Team Weekend Gladiators. Love that name. We've got University of Michigan Ross School of Business represented here. Thank you so much. Last but certainly not least, Team 99, Team Beetles from the Yale School of Management. Well done. Okay. Well, I'm going to check in with our judges here to see if we're ready to make the announcement. Naman, can you give me a thumbs up that we're all good?
I think we're good.
Amazing. Okay. Well, we're going to run through this in reverse order. So starting in 5th place, drum roll, please. So 5th place in the 2025 Case Competition World Cup, we've got Team 89, Team Weekend Gladiators. Amazing. Well done. Congratulations. Moving on to 4th place. And 4th place is Team 84, Think Tank. Well done on 4th place. All right, we've got the final 3 medals here. 3rd place is Team 83, Team Jehuda, Cape Town. Well done. Well done. 2nd place. Okay. The big reveal. 2nd place, taking home silver, is Team 81, Team Crockpot. Well done. Of course, 1st place, taking home the gold medal, Team 99, Team Beetles from Yale School of Management. Amazing. Wow. Okay. What a party. That wraps up the Case Competition World Cup 2025. Congratulations, everybody. Again, thank you so much to all the participants for the hard work you put into this, to the judges for the hard work scoring this today. Just well done. Naman, I'll turn it over to you to kind of land the plane for some final remarks.
Yeah, absolutely. Y'all, amazing job. Like, it was obvious you'd put a lot of thought and intentionality and time and effort into your stories and your presentations. So thank you for taking this really seriously. Well done. I'll just say, as one of the judges, the spread was really tight across the board. So like all of you were clustered fairly close together. And there's just a couple of things, going either direction that made the difference between all the different places. So well done. Congratulations. Enjoy your weekend. You deserve a little bit of a break and a rest. And we will see you soon in another Case Competition World Cup. Thank you again to our judges for joining us. Really enjoyed listening to your questions, your insights, you pushing on the teams. Thank you so much again. We'll see you all soon.
Thank you, everybody.
Thank you.
Thank you.
Thank you, everyone.
Thank you, and well done, everyone.
Thank you.
Thank you.
Everyone.
Thank you.
Thank
Well
you
done,
very much.
everyone.
Thank you.
Bye.
Congratulations.